Well, Brian Beaulieu from the Institute for Trend Research joins us now for an instant audit of this economic data. And Brian, you know, you were on our show a couple months ago saying 2010 is when we'll really start to see the recovery. You were really the first one to call that. And now that it's been several months from that point.
Yes.
Are you looking even further, 2011, something like
no,
that?
We're still holding on to 2010, Jenna.
Just other people are starting to come around, right?
Yes.
That's your point of view.
And so what was the
Fortunately
indication
or
back then? I mean, or maybe you can also bring it back to jobs. How much does the job market really determine for you when we're going to actually see any type of recovery?
The job market doesn't tell us when we're going to see the recovery. The job market is a function of what's going on in the rest of the economy rather than the other way around. Okay. We're looking at other leading indicators that tell us that we're 3 to 4 quarters at least away from seeing a viable onset of recovery. We think it'll probably be the first quarter or second quarter of 2010.
All right, what are those big leading indicators that tell you it's going to not be until 2010 that we see any recovery?
We're looking very closely at the trends in existing home sales, the bond market, seeing what it is telling us, the Purchasing Managers Index by the ISM, the U.S. leading indicator, and our own proprietary leading index. And they are saying
everything's bad. Yeah,
we're gone.
We're gone. We're gone.
We're gone.
And so what does that mean?
It means that this jobs report, for instance, that the world is hanging on today is just the beginning. Whether we go to 6.8 or 7.0% today will be interesting to see. But we're going to be pushing on 8.5, 8.7% probably by the time we're done. By
the time we're done being 2010. So you think we're going to top off in the mid-8s in the unemployment rate?
Yes.
And that is 2010 is the way your numbers are breaking down
yes.
right now. Well, today, though, we could go to the high. You mentioned 7. I brought that up earlier with Bob Brusky. You think we could get to 7% unemployment and 400,000 jobs lost today?
Yes, I think we can. I think that's the reasonable backside expectation of what we could see. I think 340 is probably going to be a little bit light.
All right. Well, we're going to get into more. Hopefully talk to you a lot more about all these other indicators in the market, too, because it's tough to know what to look at these days.
Yeah, it is.
So, Brian, great to have you. Thank you very much for coming in today.
Yeah, we appreciate that, Brian.